So is the stock market in a massive bubble? And also, how will that affect cryptocurrency? Let's find out. Hi everyone, welcome to the channel. So I am going for a bit of a rebrand, so make sure you do subscribe, hit the bell button and like, because you will start seeing a little bit more around personal wealth, dividends, stock market stuff, mutual funds. Obviously cryptocurrency will be the bulk of it, but it allows me to do more content like this. So in today's video, I'm going to compare why the Nasdaq is very, very important to the world of cryptocurrency, and also the dollar index is a part of that too. So let's talk about a few things, right? So, as the title will suggest in the thumbnail, I believe we're in a bit of a bubble. Personal opinions. I think we are very, very high. I think we've seen a lot of volatility, and volatility often comes with an end of a cycle, usually, right? Just going to put that point out there. We're all talking about big blow-offs and stuff, and some of these moves are huge, and I want to point them out. But let's talk about what's happened yesterday. So as you can see here, the Dow Jones down 1.45%. The S&P 500, which is the top 509 stocks at the moment, I believe 2.44%. And then the Nasdaq, which is technology, right, down the most. Recorded the most losses in over 18 months, I believe, yesterday. So pretty big, and it is typically a correction. Now, the one thing that saved its bacon last night, and why it's actually somewhat up a little bit this morning, is Amazon. Amazon brought out some data and it looks relatively good. It made it jump because yesterday was terrible. It could have been a lot worse today, but often when things are bad one day, they're often better the next day. A little bit of a bounce. Let's talk about a few things, because a few things also happened yesterday which we need to talk about. Now, we're talking here the S&P futures and the rise of Amazon and the payroll stuff, and then you got Snapchat was up 50% in one day. Why? It was down 23% in pre-market, then it went up to like stupid levels after that. We've got to look at the data from what we're getting with the coronavirus in 2020 and 2019 as a comparison, going from one year to the next year into an absolute terrible, obviously, year. And then we had an absolute massive rise in Netflix, in Peloton, Zoom, for example, because everyone was using it. And now we're seeing on the back of that, people going back to normal. And guess what? Earnings are down on those, right? It's kind of one of those things. This is why Google's done well, because advertising is high on Google at the moment, because people are trying to advertise their business to get back to normality. Facebook, a lot of controversy over the last 2 years regarding what they're doing, their change, their bad press, their data privacy, all that bollocks, right? It's creating some negative vibes. Guess what? Facebook is one of the biggest companies in the world in terms of technology and stock and market cap. They took a big hit, which is why the big problem is. So when you see here, the big massive level here, that saved the bacon. And I mentioned it this morning on my Twitter. Make sure you do follow me, by the way. So that did save the day somewhat in the technology world so far for the end of this week, hopefully. And well, at the end of play today, we'll see. A lot of this, by the time you watch it, would have played out. Certainly with some new earnings, certainly seeing what's going to happen with the overall market, because Amazon's a beast. We all know it. Anyways, something we need to also focus on and look at is non-farm roles. The payroll world of figuring out who's who and where people work and what they do. So the consensus of this is essentially basically not very good. So potential worse figures could be actually coming out from certain companies versus what, overall. The unemployment rate remains to be unchanged at 3.9%. So not really a rise, nothing really to get excited about. Sometimes you'll often see in January and going into February, people will obviously get back into work and stuff, and we've not really seen much of a boost. If you're wondering what non-farm payrolls is, it's essentially everything apart from agriculture. So people who work in good, solid construction companies, manufacturing, and obviously corporate jobs, instead of, obviously agriculture is a little bit different. So in terms of that being unchanged, not really good. If that was positive and more people were employed, it would probably incline a much stronger, healthier market. Anyways, moving on, I want to talk about this. Now, this is where I'm going to start going into a little bit of bubble territory. The market is overreacting for obvious reasons. There's a lot of, stuff happening, but a 23% drop in the stock market on one asset alone is pretty big. us in cryptocurrency, we're used to this sort of stuff, aren't we? We're like, yes, that's fine. Volatility is amazing. Obviously, if you know how to win with volatility, it's fine. But the problem is some people are investing in stock markets and index funds on their phones and just in simple ways of doing it. And they're like, ooh, wow, the Nasdaq's down 3% today. Oh my God. If you are quite heavy in Facebook and you're an early investor in Facebook, you'd probably be thinking, ooh, hold on a minute, what's happening here? So we need to be careful with that. Now, ultimately, it's just an earnings call. Yes, there's been some bad press over the course of the years, which is why the fundamentals have potentially changed here. And you can see here in terms of the quant analysis on Seeking Alpha, it's 11th in the industry, in the sector, it's still relatively high. Overall rank, not too bad. But realistically, for me, I think it's a risk holding something like Facebook with that volatility at the moment, personally, because I think with the bad press and obviously mud sticks, right? You don't want it to be continuously just drop. Look at Netflix, for example, just slowly trickling down. Even Disney's not doing great. PayPal's been doing pretty bad. Even Peloton, Zoom, etc. Stuff that has been utilized a lot in a pandemic. People bored at home, basically. It's going to create a bit of a ripple effect when those revenues are eventually starting to trickle down. Now, let's talk about this. I think this article is pretty much bob on. A lot of uncertainty in the market. This is why these are massive swings, because earnings are like reactive. If you've had a really good year in 2019 and a really bad year in 2020, as a company, it kind of sucks. But the flip side to that is if you're a technology company, you've probably had the greatest year of your life in 2020. I can say the same for me. I can say the same for Learning Crypto in terms of my brand and my company for educating people. It took off like a rocket because people are bored and at home. The fallout to this is, can they maintain, can they carry on? A lot of assets will not be able to carry on because people will be off doing normal things, right? So when we talk about that, are we really looking at this? Are we looking at another bubble where we have, and I will go to the chart in a minute and explain and show you what is kind of happening here. And this is the thing. There's a lot of information on this about volatility. And as I said at the start of this video, volatility often comes with the end of market cycles. And that's kind of a little bit scary when you look at the previous levels. And this is where the last bubbles were and where it has been in certain time periods, especially the dot-com bubble. So we need to look at these and think, well, maybe it might be actually coming to an end. And I've said this before on Learning Crypto this morning. Keep an eye out on Apple and Google and the big, massive tech stocks, Microsoft as well. Because, if Apple's nearly $3 trillion and that loses 25, 30, 40%, it's a big drop. So you need to be very, very careful with these. So the data's not looking great. And, as much as people are saying it may not be, I'm not saying it's going to just pop and just vanish. I'm just saying there might be quite a heavy correction incoming because we need to look at the chart and I'll show you. If you do want to keep an eye on the charts though and you want to look at earnings, go onto the NASDAQ website and just go to the earnings calendar. You can basically flick through and you can see what's happening. Obviously, we've got Pfizer incoming, BP, oil prices, interesting, Coinbase. That could be fun, not. Just give you an idea. So there's loads incoming over the next few days and few months, few weeks. Walt Disney, Toyota, cars obviously, CME Group, Uber could be interesting. They're not expecting a good one on that one. So yeah, we'll see how things go. Anyways, I want to talk about the chart and show you some stuff because I think it's interesting. Now let's talk about Bitcoin for a minute. Still in a downtrend, people still getting very, very excited about it. But at the end of the day, we're still tied to a few things, realistically, right? Total market cap, looking great. But we're going to change that now. We're going to change this to the NASDAQ because I want to show you some stuff in terms of why I think we could be harmed by, if I can spell, oh my days. We could be harmed a little bit, quite a lot actually, by the NASDAQ. Now, the thing I want to show you, if we go to like the 3-day chart, you can see, realistically, right, over the course of time, and it doesn't show it as well, bear with me, there we go. So when the market, essentially, when we're looking at certain things, right, when things are bullish, let me go to like a daily, there we go, daily time frame. As you can see here, the laggard effect is simple. As the NASDAQ goes down, we're relatively bearish. As we're actually going up, realistically over time, we can see that here, as the NASDAQ's been doing pretty well, so have we. Even in the times where we've actually dropped, obviously the COVID crash here, we've got to look at the fact that when the NASDAQ is relatively bullish, so are we. When it actually goes down, funny enough, so do we. right? It's interesting to note that. Obviously, I'm looking at the higher time frames. If I look at the monthly time frames as well, like looking at obviously the Nasdaq in terms of that level there, that has been monumentally just bullish. And even when you look at BTC, they look very much very similar, right? So we need to be careful of that, and that's why I'm kind of saying to people, just be careful, because if the technology world is going to come and crumble down a little bit and go down 30-40%, potentially that could happen. We need to be careful that it could ripple into us. And as much as that is annoying, it's just how things are. Looking at the total market cap as well, it's similar, very similar. Obviously, you can see here how we've kind of, as we started trending down, so did we. And even when we're looking at like the bullish periods, as this was monumentally bullish, apart from this period here where it just continued just going, that was ridiculous. But, realistically though, overall, in the grand scheme of things, as we've been bullish over the course of time, so has this. The one thing to look at as well, and it's important to look at, is obviously the dollar index. The dollar index, in my opinion, is one very big hidden indicator for cryptocurrency. Why? Because whenever this goes down, we tend to go up. Whenever this goes up, we tend to go down. It's just movement of wealth. And again, you're looking at the Nasdaq here, going up and up and up and up. Money going into certain things as, people are getting excited about spending money. But also when the dollar index is coming down as well, so does actually the Nasdaq as well. So it's interesting to note how the strength of the dollar will always correlate between strong stocks, basically, because people are wealthy, they want to move their money around, it's looking quite good. Now, the one thing that I will say, it doesn't always happen in this way, because when we're looking at overall here, even at this period here when we started to dump massively, the money printer turned on. As the money printer went on, the dollar will depreciate in value because it's obviously, diluting the funds, which would indicate why this is melted like so, and this started to run on. This is why cryptocurrency went on a massive run. This is why all the tech stocks, all the stock market data has just went boom. So we need to be careful of that. Now, when we're looking at obviously the future here, we need to be careful, because if BTC is going to drop its guts, basically, right? Let's just think, there's only going to be one reason only that this is going to drop massively. And in my opinion, it is because of a stock market crash. And that's what I think. Now, as I've said before, this is all very much what if scenarios. Let me just put this back so I can show you another thing in a minute. Total market cap, I want, thanking you. Back on there. Lovely. Now, if I go to the Nasdaq here. Now, I often say to people, why do, people often ask me, more to the point, why do you think it's a bubble? Well, we've got to look at the facts of what the Nasdaq has actually done. Since this period here, we have been on a monumental run. Apart from the obvious COVID crash here, we've been on some massive runs. Now, when we're looking at overall kind of grand scheme of things here, we're looking at the fact that from the top here to the lows here, we've had a 22% correction. I personally believe we are probably going to go a little bit lower than that, certainly if certain things do go a little bit wrong. I cannot just see this just continue to just keep going up and up and up. It has to correct at some point. It's just a matter of when. And if that is because the money printing has stopped, if that is because the earnings have kind of lagged a little bit due to the last 2 years with the pandemic, and it's created a little bit of respite and also an interest in the market overall anyways, I think it's important to know that people will start taking profits. You've got to remember here, technology stocks as well, and growth stocks, they're not dividend. Some of them are dividends, not most of them are, realistically, right? So there's no real big incentive here. These grow the most. This one moves the most. It's going to be the most volatile. We've seen that over the last few days. So when we start looking at this, we have had a lower high. Are we going to pop back up into here and create another one and then potentially another lower low? We could be seeing that correction this year, and that could obviously affect cryptocurrency quite a bit. It's obviously, we look at this, the 8th of November was literally the top levels of that week, essentially, right? Look at in the 1st and the 8th of November. If you look at BTC, again, the same top has appeared. It's important to note that we are literally following that in a weird kind of way. So if that comes down, so do we. If that goes up, so do we. So always keep an eye on it. Anyways, job's a good one. I talked a lot. Have a good weekend.